YouTubers, Mike Martin's here, Mike Martin's channel. Just hanging out at the shop today. It's Friday, Good Friday, Happy Easter. I'll do another Happy Easter video after this one. But I wanted to put this video out there for you guys. It's by Better Dwelling, and I want to share it with you guys. Canadians paid a record $42 billion in interest to service their mortgages in 2017. $42 billion to service their mortgages in 2017. That's probably why when I went to the bank to buy my house, I was going to put down 50%, and they could decline me. They said, no way. No, because you can pay this off anytime. It's like, that's why I have to buy my house free and clear. And a lot of people don't understand that, how a struggle for some people if they own their own business and they can't prove or they could prove their income, but it's hard to, with a small business to own anything, right? So I'm thinking that the bank is banking more on people that they know they could screw over. That's what I'm thinking. I don't know. It's no secret that the Canadian have taken out a buttload of debt. Now they're paying a buttload to service it. In Statistics Canada, StatsCan, numbers show the size of debt and interest payments are growing a record pace. Despite the interest rates being near historic lows, a huge ratio of these debt payments are just interest! Oh my god, so you're just paying as you go. Canadians spend nearly $1 in $10 earned servicing debt. The total amount Canadians spent on debt payments hit a new record in 2017. Canadians paid a whopping $178.11 billion servicing both interest and principal on their debt. This represents a 5.56% increase compared to the year before. The rate of growth is the fastest in 2007 and consumes almost 1 in 10 of the dollars that households earned last year. Is that gross? Because, people make 70 grand a year, but after tax they only take 40. So, I wonder if that's like gross earnings. So here's your threshold. It's busting the 200. Wow. So that's million. That's 200 billion. Look at that. Gotta play some backup music here. Holy crap. It's pushing the threshold of 200 billion. I can't believe it. The interest paid on that debt was over 83 billion in 2017. Remember, that number included the principal and interest. So if you're not sure what that means, principal is automatically actual money borrowed. Interest is the premium that's paid to the lender. So it's basically the servicing of the debt is what it is. It's basically servicing to borrow that money. Think of it like a mafia way. They put juice. They put juice on your money. So if someone lends you, or VIG, they call it VIG. So if you want to borrow $1,000 at 3% VIG, you got to pay basically $30 a month to service that $1,000, basically, VIG. But anyways, that's just here nor there, but I'm just putting that out. Total interest paid in 2017 reached $83.126 billion, about 66.07% more than the year before. This is also the fastest growth in 2007. So if you're trying to do the math in your head, it's about 47% of total debt paid. Pretty impressive, considering we're at historic lows for interest rates. So remember, guys, rates were low. Everybody bought in. Ponzi scheme. Everybody bought in. And now to service this is annual interest paid by Canadians in Canadian dollars. So that's what they paid in interest only. So that's just to service their debt. That doesn't even pay it down. That's interest only, right? So Canadians paid over $42.5 billion in mortgage interest payments. Mortgages were responsible for over half of all interest paid by households. Over $42.5 billion of interest paid in 2017 was on mortgages, an increase of 5.97% from the year before. This was the fastest pace growth since 2014. Just kidding. It was the fastest pace growth since 2007, except this number soars interest rates soars as interest rates climb. So remember, there's lines of credit, there's other credit cards and other things that are being other things that are not being calculated into. So guys, remember, there's more, there's lines of credit, there's other credit cards, unsecured debt loans, secured lines of credit, all kinds of weird other revolving debts and blended rates people are paying outside the mortgage. So they're servicing their debt and they're paying that. Imagine what they're paying on a 17%, 18, 30% credit card. You know what I'm saying? So that's a lot of servicing when it comes to paying back your debts. So this is the source is Statistics Canada Better Dwelling. The interest paid may not seem like a huge deal on the surface, especially if people can continue to pay it. However, when it grows faster than disposable income, it kills more consumer spending. Very important right here. This reduction in spending accumulates and becomes a long-term problem when the debt is tied to lengthy amortization periods, as typical on cars and homes. Oh yeah, I forgot to mention car loans too. That's a whole pandemic in itself. Or epidemic in itself. There's a reason for every three-letter organization is trying to warn Canadians to curb spending. And it's not because they're fuddy-duddies. So guys, this is really important. Better Dwelling is bringing up some very serious key points here. I've been bringing this up for the last couple of years. A lot of people have been servicing their debts through acquiring other debts to pay back. So I remember, did you ever have one of those friends when you were younger tell you the story? Yeah, I got a credit card, so now I'm paying it off with another credit card, and then I pay it off, then I got another credit card to add to the thing, and then it increased the limit on one, so I paid one back off, and then I got two more credit cards, and then this is like, this is what's happening, guys. It's musical cards, credit cards floating around, and people not sure of how to service their debt. Oh, you know, I'm young, I could still work. Yeah, but there's a chance you could lose everything overnight. And a lot of older people are going into retirement with mortgages. And tons of mortgages and debts to service. Why is this happening? Anyways, guys, I am overwhelmed with this. And it is a huge problem. I said no to debt when I was young. I saw how it wasn't real. It's an illusion. You get the money, but it's buy now, pay later. At what cost, though? That is the question. Thanks for watching, guys. Let me know what you guys think. Comment below. And big hug to everybody and happy Easter.